Hello, my friends. Welcome to the stream. I hope you're all doing very, very well. I'm just coming into the live stream scene here. Where is the button for it though? I'm trapped. I'm trapped behind this rainy scene. Live stream fails by Rocky Outcrop. Hope you're all doing very well. Of course, I'm just going to bring up the screen whenever I actually see how you get out of this blooming window that I'm in. Is that the button? Right, okay, great. My expertise here coming clearly to the fore. Hope you can see me. Can you see me at the minute? Actually, maybe you can already. Whoa, wouldn't that be great? Good to see everybody in the chat. Nice to see TradeSpotting there. Navanethan, good to have you here. Susan, Tony, and that's it. Yeah, that's it so far. Good to have everybody here. Hit that like button, all that good stuff. Now, what are we going to be talking about in today's episode? Well, this is the weekend episode, and we're going to be looking towards the weekend and talking about everything that we need to know for this weekend. And we're going to be looking at Bitcoin, Chainlink, Tezos, and of course Ethereum in this episode, and maybe even Ethereum versus Bitcoin, maybe even Chainlink versus Bitcoin, etc. But focusing mainly on the USD pairs, of course. Thanks for joining me to everybody. Let me just jump over to the live stream thingy here so that we have a better picture for everybody to enjoy. Okay, so hopefully that's us in that one. I'm never 100% sure when I'm hitting these buttons on the old Streamlabs. And let me just bring up the chart full screen and talk about where we've been then so far over the last couple of days. This, of course, is the daily chart. Looking at the spot prices here on this one. Oh, I should maybe make this fit on the screen better. How about that? Hope you like that view better. This is actually, of course, the Bitstamp chart that I'm looking at just now. And we have not managed to take out our previous highs, as we well know. And we haven't actually taken out our previous lows so far in this little interim period just here. And you could maybe start to look at this with a sort of triangular eyes just in and around this point. But of course, yesterday in the live stream, we were talking about something that was going on with the price action in this wedge here, and as you can see, we've actually managed to break out of this towards the downside. And actually what happened was we had this volatility showing up on the indicator down below here on the the DMI, and we knew that something was up and around about these areas, and of course we came back up, retested the wedge, then broke on down even further thereafter, and so far we're in a little bit of a miniature bear flag, you could say, in this zone. But of course that's kind of ignoring this green line in the background, and what we can see is that that's the 236, and right now we're consolidating just below there. That's a good place to be overall from both sides of the coin, you know, looking at this from a bearish point of view and a bullish point of view over the weekend, and giving us a nice little area to manage any sort of expectations around just kicking off the, you know, straight away here. And that happens to be coming in at around about that 19,000 and something area. So we're here, you can see that we're 18,900 and something. We're below that 19,000 area really in general, and if you're just kind of looking for a number for the weekend, then that's going to maybe be your sort of stop go number for you on that one. And we can compare that over here towards the Bitcoin CME charts. As you can see, we're here at 19,130 at the moment. So if there's a $200 premium or so, then we can take that with us knowledge-wise coming in to Sunday for looking at this and whether or not there would be a gap potentially. Okay, so let's just kind of then on the CME chart look towards the higher time frames than what we're on at the minute, the 4-hour time frame, for instance, where we can see that gap over there. And I'll not go as high as the daily time frame, where of course there's a dispute as to whether there is a gap there on that one. As you can see in the 24-hour time frame there is, but on the D for daily there is not. Let me just hide those moving averages so you can see that gap nicer. But over here in the 4-hour time frame, then we can see this fair enough in this chunky zone over here. Could we therefore be looking at this and saying what will happen over the period of the weekend? What are our upper and lower side targets, given that we already know that right now we're here at one with the current price action? And we can look towards for a couple of, you know, for instance, where's this going to close, and where is it then? Could it open up again? And if we did have any gap showing up here, movements on the spot prices up above, you know, where we see our current prices here, could obviously lead to a gap coming in here, but it wouldn't push us out of any sort of real structure with regards to this chart. Seeing the range that we've got in here, a full sort of $600 just to go up towards our previous highs, and you'd be within the overall sort of picture of where we've been recently, and that would just kind of flesh out a potential gappy looking symmetrical triangle, or even just a smaller term symmetrical triangle in this area. So we can look towards big key areas about pushing past in terms of, well, just on the daily time frame actually really as well, just that we can see that the range that we've had today with the prices being as high as 19,750 and as low as 18,830 leaves a lot of work to be done with regards to creating any gaps on this chart really in terms of that range. And that could be your bigger and lower areas in terms of the broader picture for the weekend. So jumping back over to the chart here, how does that kind of line up? And that really is shown in between these 2 points here. If I just go back over to the CMEs to kind of remind you, looking down to where our previous gap was brings in at around about 17,000. Looking down the way towards the 236 on this chart is in at 16,000 area. But taking out these lows here, 18,000 are the three sort of downward side areas there, and the same kind of applies overall here when we're looking at the spot prices as to regards where the 0.5 50% Fibonacci sort of points coming in at there at the 18,000 level, and of course the 17,600 17,500 area where we see the 618 residing currently. In terms of the 236 over here in spot, we're actually below it in terms of this range that we're looking at, so perhaps we could be looking down, but of course it depends. Have we come far enough with this one, and would we be looking at potentially that symmetrical triangle type notion that we were having brewing over there on the CME charts? Could it potentially reflect itself here, or indeed over in some other sort of format like that if there was a negative resolution towards movements so far? So let's just zoom on a wee bit back down the time frames again towards the hour time and see what we were looking at in yesterday's time frame, having yesterday's video, you know, panning out with this movement outside of the wedge, giving us our measured move more or less in terms of the textbook. Let's just kind of roughly go at 60% there with this one and stick it in and say, okay, so we've kind of had a measured move, we've come back up, retested it, and we've done what we needed to see happen. Overall now we're looking at this point and framing in with what we're doing and saying, is this an ascending triangle just on these 1 hour time frames? Could we get to some point and break that? And if we did, what direction are we going to, and would it take us past any of the other significant support areas? So for this weekend, looking up the way, 19,500 is going to be a big area for us. Like we have this 19,000 round number-ish area where the 236 is on this chart, and looking down the way, 18,500 as being important points in terms of the two $500 areas that you could be looking to if we wanted to kind of extend all the way down with a full measured move off of this wedge, perhaps towards the downside, or indeed have demonstrated fully that we're beyond that point and looking instead towards our upper side resistance if we have it from the if we have a sort of broader term view on things and look at this overall shape, zooming back out the way and saying, well, I mean, I do appreciate at the minute that there's a degree of patterns being somewhat kind of useless to an extent in heavily trending markets. If we just kind of then put the context of the two patterns that we've had on the chart here so far during El Shoyo here and hide the other ones off. So we had that symmetric ascending triangle we were just talking about, that rising wedge that we broke out of yesterday. Of course, this is the 1 hour. Then maybe perhaps, you know, we could be looking at something like this, finding support if we need to see it, kind of not wanting to kind of take out these lows that we've already had today, really looking down towards that 18,600 area in terms of the the mouse was way off in terms of that not wanting to take out these lows that we've had today at the lower end of that triangle. Obviously this is kind of putting in around about the midpoint, but we can see here that there's another little inflection around about that 19,250 area. We know very well about that one. Movements towards the top side then, of course, looking thereafter and the bigger picture and asking questions about could we have divergence or anything like that going into them. Of course, we know that in some regards, of course, we already have had well, we did okay in terms of that top, in terms of this hourly time frame. We know that there are some divergent sectors, such as here in the 4 hour time frame. I changed the ADX here after chatting about it with folk, after chatting about the crown video, down to a lower time frame just for the crack really here. But you can see that there's a potential for volatility that we've just lived through anyway on these 4 hour time frames, and of course, you know, we could maybe be just filling this out. Now we do have 1-2 touches towards the top side, kind of 3, 1 or 2 at the bottom. Could we go past this either way in the near future? And we could, and that would of course look like this sort of thing from a broader point of view, bring us down towards potentially that 17,500 area and up towards the 21,500 area. Now, this would be, if we're looking at this happening over the weekend, then that brings us back to what we started talking about when we were on the 24-hour time frame with regards to what sort of thing we could see if we saw a gap coming on the charts. Now, there's a couple of different ways of looking at this. The best way to look at it, generally speaking, is just to chart what's on the chart that you're looking at, and just to kind of, keep your head clear and be aware of. What was that? The shitcoin police, as we've been joking about recently. No, that's we're on Bitcoin at the minute, so there's no complaints from nobody. Just kidding. It could, anyway, bear that in mind. If we do go up towards the top side, sure, it could create a gap. We already have other gaps on the chart from the past. We'll not focus on that in a big way. Instead, we'll take a look at these key areas, and we know the justification just in terms of the structure, in terms of the Fibonacci retracement points, the patterns that we're looking at, and potential measure moves towards the top and lower side with if there was one thing I suppose I haven't mentioned is maybe that 60% area taking in for that 20,500. If we wanted to put in another high, I'd look out, of course, again for divergence on these and all time frames on all of these oscillators down below here. I have the MACD on the chart, but I don't really particularly want to have the too much of these lines on here just now instead. So let's look out for that. Of course, there isn't any between these two peaks. On the way up here in the MACD, it's looking okay, but there is obviously the chance for us to be forming a bigger pattern overall if we were to wedge down the way. Fake outs from this thing, or indeed just a 60% movement towards the downside, opens up for the broader term perspective of if it just kind of then give you that gestalt idea overall. This would be what you were looking to if we didn't move past down previous support there for us, and of course that would be renders all of that much more visible in the 24-hour time frame. Failure up at this area to take out our previous highs could result in, of course, in coming in for a higher low overall, and that might be the overall picture that you see happening in a broader sense over the weekend. So throwing out a couple of hellos to people that we've got just joining us. K-Doc, thanks for joining us. Demo and everyone else has had a hello from me already so far. I hope you're all doing very well. This is the swing failure point that we had in mind in the past. Remember as well, looking over the weekend, this of course is something else to look out for. So this, of course, if you are just joining us, by the way, is the weekend video. So we're looking at the price action over the weekend and the things to be aware of for this weekend, of course. So check out everything that we've been talking about really so far is with an eye to looking forwards. If we are within this zone, then we're within the this denser area of the VPVR, as you can see, straddling nicely where that 618 zone comes in at, and of course, dropping off between it and the overall sort of previous low here where we had that wick coming in at. So we can see how the overall structure kind of all adds up together quite nicely with this one. After another couple of minutes here on the Bitcoin charts, what I will be doing in this show, just to let you know, is looking over towards Ethereum versus USD, Chainlink versus USD, and then coming to Tezos after that. I will then, of course, be checking in with the chat as it kind of, catches my attention along the way, and then I'll just keep chipping away here with the technical analysis for the weekend so that you know what to look out for overall. Bear in mind, of course, then that this is a weekly close here. So just from an overall perspective, how are we doing? Decent enough week there on that one. This will be closing, of course, on Sunday. It's a spot chart. Over here, we can see the Bitcoin CME futures chart here closing on, of course, tonight, so to speak, depending on where you are in the world. And, well, we can see that we're overall shaped very nicely towards the top side. Everything looking also spiffing. Only sort of warning signs coming in here with this little crossover in terms of the DMI down below. We're above that 40 zone, pushing down past 40, does kind of change things, but there's a heck of a lot of time to go with regards to price action before we see the result for next week's candle. But this is looking at a good time for us to bring on the moving averages. So the moving averages that I'm using just now on the show, by the way, chappies and chapetties, are these four here. That color is a bit dark. I'm just going to bring it up so it's a bit pinker or something. So you can see the numbers are, of course, there on your screens for you live in color vision. 8, 21. Actually, you're going to change this to 18. 818.36.54, right? That's really what's there at the minute. And I can bring on the bigger term moving averages once it's at a point where it really has some relevance. I'll just show you in case you're wondering. The bigger ones that we use here are, of course, 50 and 200 simple. So that, of course, applies to what we'll be talking about throughout the show today if you stay tuned for the whole thing, which I do dearly indeed hope you do. I'm going to change these over to being just something else. Crosses is fine for me, so I can distinguish them more easily. Make that one white. No, make that one red, sorry, and the other one white. This one white, that'll do overall, so I know where they are. Of course, on the weekly we don't have that, so I'm going to hide, well, going to go down the chart. You can see that we're quite a ways away from testing this. If we did come down for any major retest, taking out that previous low on the weekly, then things could have a different picture to them. Looking back the way, saying that we're bearishly divergent between these two highs here that we see on this price action, and of course here that we see on the DMI down below. That story doesn't translate quite as obviously across to the RSI, but it very much is, of course, the case. And if you want to see what this looks like on the terms of the log chart up above, it really is quite, well, it doesn't really make a difference, but you can see that it's just would be natural enough in a sense to see pullbacks in around this zone if we saw this divergence playing out. But of course there could be more of it even yet still. How does that feel looking down the way in terms of these lower time frames? And you can see when we make it over to the 3-day that doesn't translate any longer, so I could just ditch this line for now to make that point apparent. As you can see, that's higher, but over here on the DMI, of course, you have that continuation of that concept. The MACD at this point doesn't have it, by the way. In the weekly we did, but over here on the 3-day we don't. Then we can just follow that on down the way and get an idea then coming up towards looking, with a view towards the weekend. Of course, trending towards the top side here in the MACD, so that's looking decent. Trending down the way here overall with regards to the DMI, looking back as far as that. If we bring this up to sort of more recent context, looking during this zone or whatever, this channel or whatever you want to call it, then we're doing all right overall here with these nice rising up highs over the course. That's decent, with the potential shout for a wee touch of hidden bullish divergence over here in the 1st of September. Coming on down the way then, how does it look, and does that picture remain quite so rosy? Bringing up the 24-hour RSI, you can see that trend of course does continue on that one. Overall kind of losing a bit more with regards to this, but if we bring it right up to the most recent times, we can see that there is a touch of divergence just there. RSI is looking all right here. So far the MACD is also starting to show that divergence, which makes me wonder at this point, do we have the potential for any sorts of wedges or anything else on the go? And if we just leave that line in for now, as thinking about it as being upward sort of resistance area for us, and then kind of straddle us around here, movements towards the downside which don't take out any of these moving averages here on the 24-hour time frame, such as the 18 period really, and don't take out the 236, we'd be forming up nicely for some other sort of wedge type pattern to conform with this MACD divergence if that were to continue across the longer term time frame. At that point would put in us a clear area to fail that at, which movements up above our higher target of 20,500 come back into play again with regards to all of that chit chatter. Now going on down the way, we can see there's other times where things become a bit more relevant, perhaps maybe these longer period moving averages such as the 200 simple over here in the 24-hour time frame. Of course that's not really getting a mention here unless we were to go down for a 618 Fibonacci retracement point from the March lows up to the current highs. Now in terms of this warning signs, we do need to bring back our minds back, cast our minds back to the chat that we had at the start about gaps and everything else. Hey Zoner, hey Demo, hey 3000 Trin, hey everybody, say hello to each other in the chat when you get the chance. You can see here that would bring us all the way down to filling in this gap over here in the CME. If you want to be so gap conscious, then if you want to be my girlfriend, you got to get with my friends. So over here looking at this gap, now of course there's this other gap to consider beforehand. Could we even fill that in? And plenty of trading to be done in the terms of percentage movements, but just from a broader term perspective, that's what we'd be looking at over the weekend if we see downward movements. Now of course movements towards the top side do elicit the potential for of course a gap on the CMEs, which would be fine as well, but we'd have to be careful in terms of movements outside of this zone. But there could be some volatility there which is worth benefiting off of if you were to be trading it. GBTC, by the way, coming into the end of the week, as we can see this red candle bringing us back down below previous areas. We did have gaps marked off here, I believe, and whatnot on the chart in the past or something like that. We come back in and touch this area. Could we be seeing the rounding off of the top here? Well, we put in these highs, and of course that's bearishly divergent movement there and there and there on every single one of these. It's got a premium on it, which is of course fairly hefty. You can see it's had a 3.5% decline today in terms of the price action, while we see 2.5% decline in terms of the Bitcoin pricing. So we could see some, if we see downward movement, look out for gaps towards this downside, I suppose, in terms of the GBTC. Maybe this could be their sort of inhibitor for this, with people wanting to wait until Monday's trading period to really sort of push the market one way or another, if this is anything to go by. But I certainly wouldn't say that this adds any sort of necessarily positive case towards the top side. If we did see a gap then open up the way, then I'd be looking for that to see how we could function thereafter. And I suppose that does also apply over here equally towards the GBTC chart, where we had that gap, that bearish divergence previously, and of course we're operating within this potential scope for any of these potential patterns we talked about playing out. Right, cool. 25 minutes in-depth technical analysis for the weekend. You can see how all of that adds together, and I would invite you therefore to carry on that technical analysis yourself down the way in terms of your own looking at the chart. If you were imagining something along the lines of anything like this being possible, what does it fit on there like for you? Now there's just one touch here, so that's very much of the imaginary nature, by the way, just as that stands. But I would invite you to of course do that over the weekend. If I close off or take out these moving averages here, and just instead of using the CME chart for talking about over the weekend, go over to here instead. You could look at this in various different ways. Of course, you have this 0 to 50% area, and there we know in terms of where the 236 is clearly in here behind right now, where the current price action is, right on this pivot-y point area of 19,000. So we know that there's other ways of looking at this over the weekend. If you wanted to, for instance, you could just kind of look between the high and here. Oops, wrong tool, sorry. The high in here and down to this low over here, and just kind of ask about whether or not we're going past certain key areas on this thing. So just what they are for reference points over the weekend. Movements down past the 18,500 area. Of course, take out the 236 in terms of our most current range, putting us in for a good potential to go down towards those sub 18k areas thereafter, you know, having invalidated this Fibonacci. We have already been as high as the 786 in terms of retracements with this one, but of course, you know, we're spinning around and around about where the 50% area is on this. That lines up fairly decent with the 236 in the bigger term picture. And of course then the 618 comes in there at 19,250 or so, which is, we've seen confluence with other sort of things along the way so far with regards to the technical analysis we've done in the show. Cool, moving on then. Keep chatting amongst yourself, everybody. Hope you're all doing very, 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 very well out there. And if you're just joining me for the show, hit that like button. Oh, I'm so glad to see the text is coming in with red names, so you can see each other talking and your actual usernames on the chat box on screen. That's good news. Excellent. So keep it coming, keep it flowing. I'll see everybody in there in a wee bit. We're moving on from the analysis for the weekend over to Ethereum. So if anybody wants to take a wee note for me, it'd be handy just now if you could write anything in the chat that it is 28 minutes into the video, and we're going to take a look at Ethereum and discuss largely the same concepts as well as what we're talking about Bitcoin one. So if you just joined us at this point, watching this over the weekend, be sure to check back at the start of the video. And where we were ending up talking about Bitcoin was with regards to a couple of Fibonacci points here. Now we can see a similar looking structure with regards to the Fibonacci we have in the background here on the Ethereum price, and this is just the 1 hour chart, by the way. But looking from this point first over the weekend, if we take those highs that we had most recently down to the most recent lows just down there, the key areas for us to remain above are going to be 577. Movements down 558 could see us going on down towards the 534 area, and then perhaps even as far down as 470 and 460 if we go for a 618 golden pocket retracement. Whether or not that would happen over the weekend, of course, would be kind of, you know, is unlikely in a sense, because, you know, you're looking over here in terms of structure and what we're really talking about. There's various other things that could come into play in the meantime. For instance, looking here, the 236 in there at 574 is a decent enough area to ask questions about support, and we do currently still have as well the potential to be going up as high as 607 and 620 and 630, and in fact the target towards the top side, breaking past that over the weekend, 638, would of course be very important to see. In terms of this, if it were to be a cup with handle, then you could be looking down to where we saw that wick coming in at there previously in terms of 50%. As you can see, that's the 50% number in there. Just removing that Fibonacci out of the way now for now, and just saying that this of course would be a key area for us in terms of support, and popping a couple other things on here to bring in a bigger picture for us. We can see that this is as well where the 200 simple moving average is on the 1 hour time frame, popping up towards the 4 hour time frame, and checking in with the graffiti that we have in terms of our chart here. And we still need to remain conscious of all these levels. Really just the same sort of thing as what we're talking about, but in terms of the moving averages, really, where do we see us? And we're below them currently, having put in this high over here, higher than our previous one, which of course was bearishly divergent. So we're going into the weekend on weakness with regards to Ethereum. Could we see some sort of weekend relief in terms of for people who are underwater shorts, perhaps towards the downside with a result of that? Perhaps we could. Looking over here, if we zoom on in, we can see, just as I actually properly zoom in, that this low here recently on the 4th of December, as you can see, that is of course today, and our lows down there at 581, as you can see in terms of the bodies that's looking at 585, was taking out these lows over here at 585 as well. So we actually have put in a lower low overall, and there's this potential for volatility in this time frame, but we're seeing this coming in and just more or less being convergent post this bearish divergence top here on this one. So we're going into the weekend on a degree of weakness on those time frames. Is there anything in the terms of the lower ones to give us a little bit of hope coming into the end of the evening? This low here, following on from that one, looks okay in terms of divergence. We're more or less consolidating within that range there. Looking down the way here, everything's more or less looking okay. So in terms of the strength of trend going into the weekend here, we're seeing it being fairly strong in terms of low term time frame. So this brings us back up towards the 24-hour time frame and saying, how are we going to close, and do we actually want to see this pushing down past certain zones? So from a bearish point of view, you're looking at that 585 zone and those lows that we had earlier on the 4-hour time frame, and taking this out anytime, especially today, would of course push us in for a negative weekend, I suppose. But looking down the way, that's what we're looking at over the period of the next few days on this chart. That kind of brings us up to 31 minutes. It's only been a couple of minutes really so far with regards to Ethereum, so I suppose I could look at some other things, but that's what the benefit, of course, of having put in the the starting off talking about things in such detail really beforehand. Looking at this low here on the 4-hour time frame versus that previous actual low. I mean, this one over here is it lower? It's just equal lows. Okay, so equal lows in the 4-hour time frame. Did I miscalculate earlier on? No, it is lower. It was lower. Did get lower lows. But if we hadn't have done, then I suppose you would have been saying that was divergent, but the lower low is just in and of itself, speaks for itself. So this is our range currently with regards to this one, and just in the sort of small term. Over the weekend period, of course, we could look at this as being still on for a cup with handle, although we did put in a higher high over here. So I don't really like the look of that in terms of, a classic setup. And with regards to Fibonacci retracement points, we've already kind of discussed that as well. 573 down the way, 536, 503 thereafter for the 50%, where the 200 simple is on the 4-hour time frame. Any pushing past that would, of course, be a strong challenge of this thing over the weekend. Now, pushing past our highs, looking back the way, we'd have to take out these other thrusts in terms of movement. Now, could we get that momentum? We could. We're not getting it from any of these oscillators as it stands, but of course, with the fact that we had a previously bearishly divergent high, it does make it somewhat easier to push past it and say that this wasn't really even the high. If you were to say that this wasn't the low and this wasn't the high and this wasn't the low, and on this time frame you're looking between this is your high, this is your low, this is your high in general here in the DMI, but at some point, and we're not quite sure where it is yet, then you'd really have to be taking out the 236, in terms of an opening closing basis to be able to make some sort of assertion about having moved past and really put in a local high as sort of confirmation of that, maybe perhaps at this point. So we're still on for just going on up the way, and if we did do that, the shape of that takes would be a clear profit taking target in there at those 630s zones for us. Now, moving on past that, there's other ways of looking at things. I suppose you could, for instance, talk about extensions on this Fibonacci, taking us up towards the 1272 there at 663 and the 1414 at 683 as being two reasonable targets thereafter, with your overall topping out target in terms of absolute greedy gutsness coming in here at the 713 area. Really, unless you're actually looking at it on this basis, and even including the wicks as well and everything else, and going tippity toppity crazy in terms of the cup with handle and saying that you're looking up to 762, any of those profit taking targets, I wouldn't put it. I would say that there's justification to integrate any of that with your own TA if it gives you confluence to what you were looking at anyway before. And cool, that's us up now. A good 5 minutes of Ethereum technical analysis. Let's move over to Link versus USD, and we can see that we're still within. Let me just hide the noise, some of the noise here by getting rid of those, and some brush strokes, I suppose, actually, since people will obviously. But we can, as I get rid of these, you can see these are two main points of interest with regards to the current price action over the weekend, and that has to do with whether or not we move outside of either these two potential patterns with regards to this blue line here, these two blue lines showing us a potential symmetrical triangle. Now this is obviously drawn in with a good degree of generosity in there for people who really want me to give it like the potential for the whole weekend to not explode over there, but it could obviously happen sooner. That would give you 3 touches there at that point on the top side. We don't have 3 on the bottom just now. Could it be that we go up here, touch this one at the same time as hitting off of this median line? This would be your bullish case scenario, of course, and push on up the way, or will we break out? Now in terms of distance into this thing, at this really kind of pushing it to put it in here scenario, you're talking about having come as far as you really want to. This is obviously just a loose idea. What we're really what it boils down to is a couple of things that are easily expressed with regards to looking at the parallel channel in the background and our previous highs and lows. Now if you just take out the brush I can draw on here, you can see that we have what would potentially be an Adam in there and an Eve there. Maybe it's hard to see the brush when it's that color, but I don't know, you get the point. And this would then put a neckline in this sort of a zone for us, and then we can just kind of outsource that over here to the 382, is it? That's the 382 Fibonacci retracement point here on terms of the lows to the highs. So if recently, so in terms of this being the end point of that one, there's a 236 we moved down. Now of course that's the general sort of bearish case scenario, and that would put us in really, and I don't need to do this, it's kind of visually obvious, down towards the lower end of that parallel channel. And of course likewise pushing past this area and taking out the shoulder and head, if you like, of this Adam and Eve, chopping off both their heats, then you'd be looking up towards a potential 15% move towards the top side, challenging our previous highs and coming in here at the ultimate sort of target there in terms of $16 in terms of trading within this upward sloping range. Bearing in mind that of course 1390 or so, 1380 to $14 is going to be a key inflection point, because what this easily turns into in terms of what the evolution of these things is, of course, is if we see this happen again, is that you get a potential for a descending triangle as an easy spin-off out of how this would happen in terms of what some people would just simply diagnose as being sideways price action at that point. Now, this is going to be on your shoulders to do this analysis over the weekend, but lining up with what we're looking at there's going to be some real key zones for us to just underline, and I suppose that last circle that I took away is speaking towards one of them, and that comes in there at 1430 up towards the 1450 zone, where we have these two previous highs, and of course this 236 to give us a degree of confluence. Now moving up there, you can assess our arrival at that point by looking at the potential for this evolving into an ascending triangle with movements up towards the median line of the parallel channel at that point, and bearing in mind how we're doing with perhaps any divergences or anything else that we see on the go at that point as well. Now you could maybe try and make some sort of claim if we see any movements towards the top side that between these 2 points here you've got hidden bullish divergence. I'm not going to argue against the point, it really depends on your perspective looking at it. Between that low on the 4th of December and that low on the 1st of December, the argument could be made, and that could foresee us just going as far as that. Within all of these zones there's decent potential for trading. just simply trading within the range of the you know, the lows there up towards the median line, you're talking about 7% plus movements there, and of course the same sort of chat with regards to trading at the opposite direction. So it really becomes down to you what you think about things. Now moving down past this zone does encapsulate a couple other points of confluence. You know, you've got the 382, then you've got the neckline of any Adam and Eve, and you've got of course any potential for descending triangle if that were to be the case. Just looking at this point here, and then of course as well, then you have this lining up in terms of the overall shape if we come down towards the bottom of this parallel channel, which of course is where the measured moves would take you to, and that would be the 50% Fibonacci retracement point at that point over there. So you know, that's where we stand with regards to this one. Anything therefore then moving past these points I would regard as being of course out with the likelihood of the range for the weekend, but it does tie in with various other targets where you might be looking to. So fake outs from the channel, of course, if that's what you're thinking about at the time, would come in with the potential for a 618 Fibonacci golden pocket retracement, bringing you down perhaps as far as that $10.30 area. But of course that would be extremely an extremely decent bearish move to make and quite far away, but that's where you would have that if you're looking for support past that point. Now movements up beyond the sort of the easy fake out territory in terms of Chainlink up here at this top zone, when you get up towards the $14-15 area, comes back in it again at where we find our previous high in there at 1750, and that would of course already entail a huge move towards the top side. Really, that's the next thing that we have between us there and up above, as you can see with the VPVR and everything dropping off between these points. You know, that really did kind of just scale straight back down again with you know, potential chunks, as we can see as well. This like this movement here has had this very zigzagging approach to things, so we can see that along the way. Obviously that leaves me in a position where I'm going to really badly need to clean up this chart for next time, but thanks so much to everybody who's joining me for this. Just so that everybody knows, if you're tuning in late, my name's Rocky Outcrop. This is crypto technical analysis for the weekend, done in depth. At the start of the show you'll find a chunk on Bitcoin, and it explains all the concepts that we're using to then thereafter look at the other coins. And we saw us coming in at around about 30 minutes or 27 minutes or so for Ethereum technical analysis, then about 35 minutes or so for the Chainlink technical analysis, bringing us up to where we find ourselves now, about 41 minutes into the video, and me just jumping over to the Tezos technical analysis. And of course, if you are just joining us for the technical analysis for Tezos, I would highly recommend that you go back and watch the rest of it and see what you know you're missing out on, because of course there's context involved in everything that we're looking at right now. So anyway, here we are in the 4-hour chart. I'm going to hide all the background stuff here and just kind of zoom on a wee bit and say, isn't this a little bit kind of, you know, looking to have a degree of winding the spring about it? Looking down below, we can see the winding the spring happening with regards to our DMI indicator, of course, as well. A reminder to folk that I shared a video on the community tab of my channel in yesterday that Eric Crown put out, where he's talking about the DMI indicator. It's not very dissimilar to my own video actually about the DMI as well. So if you've not seen my one, check it out. If you have seen my one and you're looking for information which isn't going to, you know, sort of override what we're talking about and everything else, then of course you can go ahead and watch that for extra context. Check out the community tab on the channel for the related post about that. And of course as well, in there, as the generous and lovely chap I am, I included some sample code, no big deal, just so that you can add, of course, a customized DMI to your own charts if you haven't done so already, very much like you see below, where you can get a flash in the background of signals whenever the ADX is super low. And of course they've got these areas in the background all laid out in terms of colors for showing us different key zones, and it's editable and all that good stuff. Now, something that you might actually be curious about at the minute is with regards to the ADX, which I changed recently, and as I change this up and down the values, you can see that of course that interacts with where we see this volatility zone changing, and of course you change that up and down as well depending on your particular setup. Now I wanted to just reduce this a little bit because we're looking at crypto markets just for now. You know, haven't had a chat with somebody about that to see how it goes. Anyway, currently you can see that we're in volatility territory, and that of course makes sense. I'm going to look at this upward sloping support line coming back even as far as here, and when you catches your eye you can see coming back there. Just in terms of clear visuals and fairly obvious things to first off talk about, the drones are going to spring back on, and as you see as I put that in there, we already have it in place. Here's one I made earlier. Perhaps just here in this time frame it doesn't line up perfectly, but in general what we're looking at is, can we stay above this over overall upward sloping zone. If we can, then the top side target comes in there at 242. We're down here at 231. We were talking about this yesterday about how we'd like to stay above the whole 240s area, but there you go, a degree of weakness in here. So providing that we don't move down past this point, then you can disregard any sort of immediate threat in terms of this being an Adam and Eve. So you want to be taking out that 236 again. So in terms of what we need to see happen over the next wee while, top side talking about here that this 242 and then of course 252, two clear targets towards the top, managing to find support should we need it at 230. Now if we do go down past that point, that's okay. You've got clear fake out territory coming in here for everyone down towards 220 as well, looking over this direction for the weekend, offering up a relatively decent buy, I suppose, in some ways, if you're going to maintain your bullishness anywhere in this zone where you're above the, of course, the lower end of that pitchfork. Now we want to be able to convert this pitchfork over into an upward sloping one and everything else, but we're going to remain patient on doing any of that until such times as we're able to break past some clear areas for us, you know, just for instance over here, and make that line up however you want, but just moving past these zones in terms of our median line of the pitchfork in there at 253 like we already spoke about, having already taken it to 236, and then looking up towards the top side where we have our $3 target, or 280. Now 280 was of course a suggested target by one of the community members there with regards to a target for Christmas time. Would it be possible to get there in terms of how this high shapes up versus our previous highs? Now we did okay coming in here and putting in a higher high overall. Looking back over to the left and when this last peak was, we did better than that. Looking back again to when the previous peak was over here where we put in a higher high thereafter, we did better than that as well. Then just going back the way, our last high that we had in at that green line over there at 265 is where we saw the last high, and we can see then we're doing better than that as well. So we're not coming in terms of the price action being higher, which is key with regards to this overall downward trend, which was this lower high was very much a part of, with regards to being able to say that, you know, we're moving past this without hitting bearish divergence, and this is kind of, you know, dismantling that structure for us looking over then the weekend. So can we see this continue? And if we can see it continue, we have to look towards that 265 zone in lots of ways with regards to the, you know, a potential ceiling for the price. But then of course we know that the 280s is the next area, and then the next target towards the top side is going to be in there at around about $3. But if we did see a pullback in at that zone, that'd be fine. That'd be the 50% pullback area. Fair enough, good to see. If we go past it and traverse towards the top end of the pitchfork in the background, you're looking up towards 362. Is it too much to say that we would hope that to happen this weekend? Yes, most likely it absolutely is. There's various other factors that really need to be taken into consideration. When we look here in the 24-hour time frame, we can see that this clearly could be, you know, like a head and shoulders, very much slanted towards the top side and filling out the potential for this other pattern, with perhaps, you know, it being, for instance, more like a ascending, broadening wedge. But, you know, regardless of that, either way round, your targets add up to being more or less the same thing, which is what we always find in terms of the interoperability with regards to patterns. If this was a head and shoulders or it was a broadening wedge or whatever, you're looking towards the same target. It has perfect confluence with really where you find our previous lows and of course the downward side of the pitchfork. So in terms of looking forwards, and this is really applies to the month of December essentially as much as it does the weekend, but when you're talking about breakouts, you need to stay calm with regards to the price action above 215. You need to stay aware of your surroundings above $2, and then of course with movements down past that point, you've got to be aware of the pitfalls of the potential 170s area with regards to movements towards the downside thereafter, should something like that all go awry. The best laid plans of mice and men often do gang awry after all. But let's remember then, in terms of this movement up towards the top side, the same chat we had in the 4 hour with regards to throwing off any potential shackles of bearish divergence remains in place, the case indeed. And of course what we see here on the DMI is this overall potential for an upward movement. As you can see, we're still above 20, below 25 as denoted by this ADX here being drawn in orange right now. That's the way, I like it. So I put that in there in that comment in the community tab if you want to grab that code for yourself. But we made it up to 30. That's good. We kind of took out the sort of the strength in terms of the directional movement of our previous high there. Now I don't really tend to look across correlations between these two DMs in terms of the yellow and the pink line there, both representing of course the pink and the pink being the negative DI and the yellow being the positive DI there in terms of correlation back the way, but it is important to see that we of course had this more significant movement up the way than in terms of the strength that we were seeing on the way down the way as we saw this bullish divergence come in, and it does place us in a good stance looking forwards, in which case I would like to see this potential head and shoulders fail, as they are often want to do 60% of the time after all, and of course then regard this as a potential sort of reversal to the downwards trend pattern potential, or a continuation towards the top side, as a sort of broadening wedges are often continuation patterns, but with any potential support coming in there should we need it throughout. Cool, going to jump on over to the chit chat, just checking in with everybody. That means that the Tezos technical analysis was actually a nice solid 40 minutes until 48 minutes, so you're looking at 41 to 49 sort of ish, about an 8-minute long section for Tezos. Cool, right? Looking towards the weekend with in-depth technical analysis to kind of keep you on the right side of the market depending on how you go. So I hope everybody thinks that was the dog's bollocks. Let me look over to the chit chat now and give everybody a shout out who hasn't had one so far. The last time I glanced over, I saw that Demo had arrived, and then after that we have Etienne. Good to have you here again. It's lovely to see you, my friend. It's nice to see all of the regulars here in force, such as, of course, 2000 Trin and Zoner. I see Demo piping up with a question: why do you use EMA versus SMA versus HMA, etc., etc., etc.? Well, in terms of looking at these numbers, just as a broader thing, you'll have noticed that with regards to my moving averages, you'll have noticed that I use a short-term exponential. These atomic numbers here, the 54 isn't particularly long in terms of moving averages, but you're certainly getting to a cutoff point. You'll see that 54 is higher than 50, and it's by a factor of 4. But of course, this is an exponential moving average and therefore responds quicker to the price. Then here I have a 50 simple period moving average, and the reason for that is because it just kind of bases it out over the price action of the sort of last 2 working months. So effectively you could be looking at this in terms of crypto as being a different calculation. We used to talk about that in the past. I don't know if you remember the channel back then, but you can certainly check in with the likes of Peter Huer, who could explain it for you, so I can skip it slightly. But I'm sure you get the maths, generally speaking, looking at this here. When you talk about things like 50 and 200 in terms of the working week having 5 days, typically yada yada, then you can translate these across to different time frames, and you often do see a correlation quite distinctly between the CME chart on one and the other one on the other. Anyhow, just on that note, the 50 and the 200 are the classic sort of golden death cross conundrums that you have to encounter from time to time, and the outcome from them is so often a retest of both of those. So you kind of get various different confluences based on various different ways of looking at the market on across time frames, if you like, if you will, given that in terms of the knowing, just kind of being familiar with moving averages kind of gives you a different sort of perspective from time to time. For instance, knowing that the 20 period moving average is also the middle line of the Bollinger Bands and stuff like that. Kind of, you can look to these different things. Of course, that's a simple. So anyway, it depends on what your use case is for them. I put them on there to give everybody the best case information. I look towards the exponential moving averages for crosses amongst themselves, the slope that they're exhibiting, the positions relative to each other, the differential between the sort of the space, the did I say their formation? Probably did. Their position relative to the price, above or below, the crosses when they're happening, whether they're above or below each other in terms of giving yourself a sort of qualifier for having a slow moving average to qualify. So you'd want to, for instance, in an upward trend, you'd want to see for instance, in terms of these crosses down here on the small term time frames, you'd like to see for instance, when these cross towards the top side, the yellow and the green, they're going to be positioned below the 54 over here in terms of this. So you could sort of disqualify this in terms of being a positive cross, whereas if it happens the other way around, not that this is the best examples for you, but here we go. Recently we've seen the prices turn around and get into the point where they're above the the 54 as your sort of qualifier, and it put you in a decent enough position to take a trade where you've obviously would have had to have used different risk management factors in order to get out of this in profit, in terms of namely particularly not being greedy and recognizing the fact you're on a small time frame and all that, in the face of probable divergences and definite and wedge pattern and everything else there that we actually, the berry pattern that we already talked about that we broke out of, is that going to show up here? Whatever. Same deal really there. So you'd have to bear that in mind, and you can base your strategy off the back of that. But of course, what we do is talk about a bunch of things. So anyway, there you go. There's some answers for you. Ola said 3,000 Trin earlier on. What's up with the meteorologist at the bottom? Oh yeah. Oh, I forgot about him. He's from yesterday's video. Shall I get rid of him? I'll get rid of him because he's distracting for us. He was here to actually do some translation work for us. We needed him because he was translating everything that he translates everything I say into string theory. He's not for the hard of hearing or any of that sort of stuff, not at all. He's here for people who are just so scientific, so I'll get rid of Degrassi, and there he's gone. Wave bye-bye to Degrassi. Just catch up with the rest of the chat then, and see what everybody else has got going on. So shout outs to my friend Richard. Hey, good to see you. By the way, you'll notice down there, if you see down there below the video box, just down there, you'll see your name is there as the latest subscriber, so that's cool. So nice to have that. Fixed that just before the stream. Thanks so much. Shout out to TradeSpotting, who was the one that helped me figure that out. Nice to see you here, Michael John Scott. Good to have you. What chart is this for on mobile cheated? That was I don't know when that happened during the time frame, to be honest with you, mate. I did explain at times. Saint Resin, good to have you here, buddy. Rocco channel is looking great. Thanks so much, buddy. Really do appreciate it. It's good to have the compliment, of course. I love to hear it. So nice one. Keep them coming. Not on my radar, but .link Avi SNX. Okay, cool. We talked about, by the way, Michael John Slot, we talked about Link, for instance, in this episode and in yesterday's episode, and we also looked at SNX as well during that show. If you like, you can go check it out. Seeing the Garden Prophet arriving and giving me a wee clip clap, crystal ball plant clap. Nice one. Cheers, mate. Nice to have you in here. The plants are still alive. They're still doing okay. I'm looking after them. They're doing okay, and it's good to have you here, Brandon. So nice to see you as well, K-Doc. Michael John Scott as well. Good chit chat going amongst everybody in there. Oh yeah, I sold XRP too soon. It had it from 10p, sold it at 30, then it shot up more. Well, what can you say? I mean, you didn't do too badly anyway at 300% profit. I wouldn't call you, I'd hardly call you a failure, having got it from 10p, but still there's always opportunity. Always is. The Brandon Profit chirped in with, I sold at 89 on Coinbase, bought at 34, got lucky, can't wait to get more. And I suppose that demonstrates as well for you what you're talking about. You sold at 30, he bought at 34, that's already gone up there, past 10% movement towards the top side. It really depends on what particular perspective you're using, and you're both winners when you think about profit moves. Of course, your investment increased from 10 to 30, so that's 300%. His increased from 34 to 89, so that's actually less than 300%. So it really depends on how you look at things in terms of who was the smart one out of the pairings. I think you both were. Everyone's a winner, right, babe? Ain't that the truth? Okay, cool. So 3,000 Trent, I was thinking string theory, love the quantum physics play. Yeah, cool. That's what we're doing. And I wanted to translate it over. We were looking at the CME chart a lot, and of course, for the benefit of the metrologists among us, that went to Horoscope University, I thought I would keep him in there, translating everything over to string theory for him. The Garden Prophet, totally both winners. There we go. There you go. That's it. Nice to have your confirmation. Bang, bang, bang. Okay, just hit the gavel. That's what it's like on Sons of Anarchy, isn't it? It's been decided, yeah. We're both winners, dude. Cool. So that's my Sons of Anarchy impression. Let's do a winner's dance. Okay, let's do a winner's dance. There we go. Everyone's a winner, babe. Ain't that the truth? Right, cool, nice one. Well, I do must admit, that I'm a little bit later getting started here today than I fully intended on being and such. So I probably will wrap up fairly quickly. Let me know, what do you think in terms of that in-depth analysis? I think it was pretty much spot on for the weekend in terms of what you would need to know if you want to balance it out with what you're looking at currently yourself. So I'm just going to dive back over to the Bitcoin price in here. Well, actually, no, I'll meander back to it, taking a little journey through the scenic route of the Ethereum Bitcoin chart here and bring it up on, say, the 4-hour time frame. Leave those moving averages on for now and just kind of check in with what we've got on the go. Okay, so a cross here that happened between the yellow and the green. You can see then that in some ways you could maybe discount the fact that crossed there, as we're currently above the longer term moving average there, for instance. But that's of course an early signal, and it's statistically speaking, just in terms of whichever ones you use, you may actually be better off operating off the back of these crosses, really in advance, especially whenever you're in here challenging at that line. And perhaps if you wanted to risk management yourself, this one you could keep an eye on is sort of like one of those car warranties. If you call the yellow line 5 years later, and if you call the pink line 54,000 miles, then your car warranty would be to say, whichever comes first out of those two options, should you get into a position moving down the way off the back of having taken out a previous low over there and having a negative cross on the DMI in the face of bearish divergence across all these oscillators down below. Now that would be your short position, short in lows, of course. Now the question obviously then becomes, from a broader perspective, that this is very much early on and it could just easily be channeling out and all sorts of things as well. So things to be aware of in terms of where we could find positionings of stuff if we see a turnaround. So you can obviously manage yourself very easily with that whole sort of that car warranty thing. Is it going to be 54,000 miles or is it going to be 5 years, whichever one takes you out first? Nice to see the laughy smiley face coming in there from Brandon. Good to see you enjoyed the winner's dance. Weekend gains, hopefully. Yeah, hopefully weekend gains, that's what you're saying. If we look at the charts and we're just kind of really sort of pessimistic about them, then you could make a pretty solid case for there being weekend relief for people towards the downside if we see key areas being taken out. Now, of course, if we don't, that is, of course, the inverse of the same story. So really looking over the next couple of days, how are our opens and closes coming in about with regards to this one, and will we see upward side moves? Now, of course, in terms of this chart, you could be looking in exactly that direction right now if you were to ignore the fact that we've had the bearish divergence and the lower lows. Now, one way of bearing this in mind and taking a wee qualifier out of this sort of thing is to remember that in times when you see the volatility such as this, it can translate to seeing sort of movements like what we had at the top of the show when I had that wedge on before from the small term time frames here. So looking at this area, which was a wedge, and then we broke outside of it, what you could see was that we had the volatility here coming to an end as we broke out of it. Then we came back up and retested that zone. So you're getting this movement here. It's not just the case necessarily of always having one thing and then a blast off trend and move, but quite often, you get a degree of volatility working in both directions with that one. Whoa. Stretch it out, Rocky. Stretch it out. Whoa. Feeling all right. Yeah, feeling all right. Okay, so I stretched that out disco style. FOMO TA 101 says, Zoner, cool. Buy high, sell low. Is that what I called this stream? I think I meant to call it something silly like that. I also then went to call it something else. So I'm not sure which one showed up. What did it get called in the end? I had a better name for it, by the way, much better name. The title's supposed to be in-depth Bitcoin weekend analysis, but when I first went to publish it, I called it buy high, sell low. Unless that's just a massive coincidence. There's the shitcoin police. Don't worry, guys. Don't worry. So Garden Prophet saying, unless the high holds. 3000 Trin says a whole bunch of Zs. I'm going to take that as a compliment. And that's cool. Okay, cool. So I feel like we're doing all right here. Can I just ask everybody who is currently viewing, because I can see there's 17 concurrent viewers, and I suspect not all of you have hit that like button, what with the like number being 15. It would be absolutely awesome if you could send this video into the weekend with a like. And by the way, to everybody who's watching along with this postmodernism, whatever, in a sort of satirical way over the weekend, then you could, of course, obviously smash the living daylights out of that button as well. That'd be really very much appreciated. Rocky about to hit the pillow. Well, you know, it's 9:30. It's 9:30. It's Friday night in lockdown. So yeah, possibly. Possibly. No, I'm not going to hit the pillow just yet. But you know, whatever. Oh, hey, nice to see you, Ben B. There you go. Good to have you here, buddy. Thanks to everybody for joining me. Thanks for hitting that button there, Ben B. Somebody decided to vote with their legs and left the stream, so they were down to 16 concurrent viewers. But thanks to you, Ben, then we're up to 16 likes. Boom! 17 likes. Check it out. Now, what about that for some absolutely fantastic vote confidence stuff there from the community? Thank you so much. We've now exceeded the current viewers in terms of the number of likes. That's what I like to see. Thank you so much to everybody. I hope that you do find benefit from this. By the way, if you have just joined us or you joined us recently and you're not sure exactly what this is all about, the video is a real nice kind of look at the market to give you a way of analyzing whatever particular coin you're interested in based along the same sort of lines of what we've been looking at over here. There shouldn't be too much of a distinction between what you're finding on whatever chart you're looking at in cryptocurrency land and the nice cross section that we have on the show here. Starting off with Bitcoin, we moved on to Ethereum thereafter, and then did Chainlink and Tezos. And the timing for those, by the way, for anybody looking for that, of course, was the first 25 minutes were spent on Bitcoin and a lot of chit chat about, you know, how to understand what we're talking about so that we could carry that forward, as well as the first 5 minutes that were just whatever. Then we had from 30 to 35 ish, we had, or 27 to 35, we had Ethereum. Then from then until 40, we had Chainlink. And then from 40 to 48, we had XTZ. There's your timings for you for your table of contents for this show. Thanks so much. Check it out. I see that we're at 17 concurrent viewers, so we've attracted another person. And of course, there the like button. We're at 19, so we're just sticking ahead of it. Oh, we got 18. So to those people who have just joined, if you didn't see me speaking through the table of contents for this live stream, I literally just did it there now. In fact, I could write it up on screen or whatever, or I could put it in the chit chat, whatever it is. If you want to ask at any time, when did we look at something, we were taking a look at that, so that's cool. And the way that it went was, of course, just zoom back a wee bit. I was just talking about it 1 minute ago. Well, it started with Bitcoin, moved on to look at Chainlink. Got it wrong. I knew I had to stop saying it or else I'd get it wrong. Did Bitcoin, then Ethereum, then we did Chainlink, then we did Tezos, then we came back and looked at Ethereum versus Bitcoin and arrived ultimately back at the Bitcoin chart, viewing this area here of 18,800 with a suspicious eye, knowing that we can't go on forever underneath the 236 consolidated without potentially, you know, moving past certain key zones. And with our sort of idea in the middle of in our heads at the minute, with, you know, looking at the charts, we're saying that you've got your kind of car warranty style thing. We have a crossover here with a downward style movement. We could use in terms of the yellow and the 8, which is the 8 and the 18 exponential moving averages. You could then say moving down past this 34 point or 36 point could take us down to the 54, and that could be your most current scalp move. If you're looking at this and saying that this is not indeed a higher low, and we're not just consolidating in a triangular shape in this meantime area. Cool. Add the chapters in the description, sure. Well, I will do that at the end of the video, for sure. But I would have to have well, I can do it, can't I? I can edit it. Cool. So let's just do this together. So the what we have is Bitcoin is well, actually, the way you do this is you type in 0000 and then you go intro, right? Intro scene. And then you go 05 because it was 5 minutes in, and then we did Bitcoin TA, right? Bitcoin TA. And then at 25 minutes-ish, right, because it's not super accurate, we'll call it 26. Let's call it 26 then. We moved on to Ethereum TA. Then we did 38 minutes in or so, we'll call it, or 35 minutes, we'll call it Chainlink. So for everybody who's just joined us, there you go, 35 minutes in, it was Chainlink TA. Sorry for the boredom here. This is maybe best not to do on stream because I'm too slow at it, or maybe if I didn't talk so much. Then from 40 minutes on, we did XTZ TA, and then from 49 minutes until now, we did chit chat with the crew. Actually, no, we didn't. We did ETHBTC, right? Or is it BTC? ETHBTC. Then we did chat with the outcropticians. So get your messages in there and we'll read through them, see if there's any suggestions for coins. 28 minutes says somebody, so 28 minutes for Ethereum TA. Thanks so much. I hope I'm just going to run with it. And then so if you want me to take a look at any coins, then get it in now, because I can add a timestamp to the description before it hits save there. So if anybody wants me to, and that would of course be 1 hour and 7 minutes. And if not, then I'm going to say that was it one? Is it one? Yeah, 107. So I'm going to say that I'm tuning out. Then if not, then I'll just call this bit the sort of the bye-bye scene. So anybody who wants to, that's cool. It's cool. The rawness of your stream is hit. I hope that's a good. I hope that you like it. Yeah, this is constantly, by the way, always for realsies here, everybody. Always for realsies. I've always been authentic with my technical analysis. I started off doing the sort of the pre-recorded videos, mostly as a function, of course, of having limited sort of internet bandwidth and all that. And whenever I do go to other places where I've got less, I'll be doing them again. But I always did them in a live format sort of view and try to be authentic. I think the number one thing about being authentic so that you can see stuff. There we go. Michael John Scott, you did it, buddy. You did it. You got in just on time. So I'll change this over to say 109, and it is, of course, taking a look at ICX because of John. Your name is going in the description. This is a suggestion by John Michael Scott. Oh, sugar, got your name the wrong way. Michael, sorry for my dyslexic name reading. John Scott. There you go. The man with 3 first names. Pardon me. Save. There we go. It's in the description, so we now have chapter titles for everybody who's watching this. At the end of this section, I will go back over to the chit chat and catch up with y'all one final time and then say cheerio and wish you all the best for the weekend. So let's do the same thing. Now, I'm going to assume that you wanted ICX versus USD. Did we look at this coin the other day? Did I talk about it? Got an itchy face. I'm going to assume that I didn't, what with the lack of pictas. There's not very many pictas on this one. Looking up towards the top side, in terms of this movement that we had, how far have we come with regards to the retracement against that upward trend? You can see we came in and got a 618 golden pocket retrace before moving towards the top side, and even taking out the 382 over there on that one. So just positioning that there so we have it for kind of reference, and taking in another one here off these tops down to where we've actually had our most recent low then here. Where are we with regards to this? And we are above the 236 over here. That is good to see, with a view towards perhaps looking up towards 0.047 in this area over here as being a target towards the top side if we did move past this point, without managing to take out a high. Came in here and you can see we've got very high in terms of the DMI's ADX part there, and then of course touched off that critical red area and moved down the way, taking out, getting rejected off the 40 line on our first pass, moving past 50, going up to our red line of 60, getting a classic turnaround in there. As you can see in the past, when these sorts of things have happened, this was being towards the downside, of course this being towards the top side. And what did we see thereafter in terms of movements? Well, of course, a fairly large one, and that's what we can also see in terms of having got that 618 Fibonacci retracement. So we've done enough bloodletting, if you like, from certain sort of point of view. If I then put this on the 24-hour time frame, we can see that we have actually got this upward trend here in a position where we can see the ADX is above 25, and in fact as well just kind of moving up above 30, as we saw the price action do recently and get rejected on its first pass at this movement, but then with the potential to move on up afterwards, not putting in a bearishly divergent high, but of course with the potential for this same classic structure we've talked about in terms of the other charts recently, where you have the sort of the rubbish head and shoulders here, like this sort of a thing happening in there in the background here at the price point, where a movement down past these significant moving averages would be pushing past that zone. So on the 24-hour time frame, zooming in and catching up with our chat here on ICX, you can see that if we were to push down past, which we have done currently, the 200 simple moving average on the 12 hour, how about on the 24 hour here, you can see the 200 simple is just below us. On the 12 hour, you can see that we're coming in here with the potential for a cool. Okay, I'll catch you then after this. Thanks very much for the beer on me. That'll be put to good use this weekend. Thanks so much for that. Cool, by the way, cheers for that. So yeah, looking at this is I will come over to your chat in a wee minute, but we're seeing that we've got the 200 simple here on the 12-hour time frame coming in for a potential golden cross, okay? Having death crossed over here and encapsulated this potential sort of kind of cup with handle-esque movement here. Now, cup with handle it is not, because we've not got the preceding trend towards the top side. In fact, we could look towards this as being a cup with handle. Yes, I'll get around to that in a bit for you, by the way, 3,000. So we're looking here and saying that we didn't come up as high as that, but we did certainly get, movement down the way. We're also disqualified by the 618 golden pocket retracement that we had here at this downward, and we're coming in for a golden cross on this one. The inverse story is true here over here on the daily time frame, where we see a death cross, and this could resolve itself with some upward movement, but of course taking these two out towards the downside is going to constitute a test of both of those moving averages, as you can see there on that downwards movement, which of course is going past that area, which is our head and shoulders type movement on that one as well. And there's various other ways you could look at this, such as the sort of, if you ignore the structure within the structure and you're looking at the outer bounds one, you're talking about an ascending broadening wedge, which typically is a continuation pattern, and then of course your prior trend at this point is down, and then this would be your target coming in around about these areas at 0.028, and this is of course your broad term, broad, B-R-O-A-D, broad, your broad term view on things. So let's just take it down a peg and we'll jump over towards the QNT, I believe it was, thingy, and I'll be able to put in a wee edit on my description as well to put that in when we get round to it. So you can see that we've that overall, this is the potential for this Adam and Eve type chat here that we've had recently. If we see a turnaround at this point with a more horizontal looking neckline structure for us, the moving averages there will speak for themselves if you allow them to do so. My friend, with regards to this this golden cross that happened here, having then afterwards tested off of both of these moving averages towards the downside, broken it down the way with the potential for movement outside of that zone, and then of course this negative trend here you can see with the ADX taken up towards this critical area of 40. So this will give you a good way of managing your risk if you've got none at all whatsoever, in terms of looking at this over the weekend and how we see this progress. Movements up past this zone here, bringing in that strength of trend towards the downside, seeing these things move away post-cross with the inverse potential for a cross back the other way. And as you can see, it kind of flip-flops across with regards to these averages on the different time frames and how they're panning out recently within regards of this consolidation, which is overall a non-bearishly divergent upward trend, and this is offering up a decent 60-40 sort of reward split in terms of an upside potential move, and that would be a decent enough one in terms of being able to manage your risk fairly easily on that one. So thanks for your patience, my friend 3000 Trin, and we're going to go there and type that in. So your name is also going in here, and I'm going to say thanks very much. This is QNT suggestion by 3000 Trin. Awesome. So there's our table of contents for the description made, and provided nobody comes along with any more super chat guys, donations or whatever, by the way, feel free to do that. It's in the description down below. Totally no problem staying on past the cheerio point, but otherwise we'll say cheerio. Right enough? Okay, cool, nice one. So let's bring up your coin. Did I look at this one recently at all, ever as well? Have we spoken about this? We're going to assume that you want to look at it versus USD. Wait a minute, QNT. Are you actually talking about Quantum over here in terms of this company? QNT USD, Quant, TradingView, Bittrex. Right, cool. No, we've got something. That's calculated by TradingView. Are you trading it? I'll give you a second here to tell me what chart you'd like to look at in terms of this, but I'm going to assume that it's QNT USD. That could be totally wrong. It's calculated by TradingView. Let's bring up this one. At least we know that this is the way it's traded in terms of an actual pairing for just now. We'll bring up the price action full screen first off and go up to a reasonable time frame on it and get a taste, a sort of sniff at what's going on here bringing on all of the price action that we've got. So what we're looking at is a coin that's 2 years old, essentially having started its life on the dawn of the year 2019, and then immediately taking a rip rocketing ride towards the top side and giving people lovely 300% gains, for then dumping it down the way and seeing a massive drop down the way of like near enough 80% off the price point, then going back up again. And really overall we have KDoc would like to see OCX, says TradeSpot. Yeah, cool, okay, TradeSpot, thanks for giving me that shout out. I'll take a look at OCX. Sorry, oh by the way, it's mentioned in the chat. Cheers, thanks, cool. KDoc, cool, I'll do that after this one. And that'll be our final coin for the evening, right? Unless blah blah blah, same qualifiers as before. Cool. So yeah, looking like we spent a long time kind of finding our feet in this market. This could have, you could imagine this sort of the head and shoulders type aspects that people would be saying, and the various different times along the way, the different sort of patterns. You have triangles here, you'd have a descending triangle here, whatever else. Then we see this big drop down in prices where we put in our lows and then move towards the top side ever since there, kind of, more or less following along with the rest of the market from March up the way in a nice highs along the way up. And we can mark some of these things off then in terms of just this movement. How about we recognize that this is a higher low and a higher low, and this indeed is a higher low compared to over here, and not get too carried away just in the immediacy of things with regards to whether or not this is lower than over here or any of that sort of stuff. Okay, we'll just go with it as that, and we can say that from this point down the way, they've got this curve. Is it fair to say that we're in some sort of channel? What if we take it off log? Yeah, okay, so when it's off log, you can be able to fit it on much nicer, really, I suppose, with regards to this downward, the downward section. Oh, as I look at this, I obviously have done technical analysis on this in the past. Cool, that's good to see. What is this, by the way? Quant. Quant. Ages ago. Yeah, Quant. I mined that back a few years ago when it was pre-release before it started trading. Then I lent my friend a computer, and I never saw those coins ever again. So then looking up towards the top side, bear in mind that they were worth nothing back then, so anything's better than nothing, right? This is not the worst thing in the world. It's actually worth quite a bit when you can consider it. Yeah, I'm annoyed about that. I'll just forget about it. I hope I've made a mistake there, made it different. Confused the coin. Pretty sure it didn't. Looking up here, then we've maybe I did though. Hope I did. We could be in this ascending broadening wedge. Now, of course, this is an ascending broadening wedge based off the back of nothing beforehand. You couldn't say that this is some sort of continuation or reversal pattern when you're talking about the first half of this chart being so solidly, trending and tightening out the whole time, and then a movement into this zone where we've actually finally had some times to trend. But we can at least look towards these two zones in terms of like whether or not if we go down past this zone, would we be challenging our previous lows, or indeed if we go past this zone, are we challenging our previous highs? Of course, yeah. So looking up the way, which friend? Lol, lame. Yeah, exactly. So So, and of course as well, we currently stand in a position where if we want to be real about this thing, let's be real about it. We could be breaking out of this zone right now. Let's zoom in and then into the sort of down the way and see, is this sort of traffic, if you like, this amount of exchanges in terms of transactions, in terms of the buys and sells volume on the chart here, breakout worthy? Not necessarily. We don't have that higher low. We're in fake out territory and evidently come down to this previous area of support and resistance that I've clearly identified. Now this other one lines up with perfectly a retest of that zone, so giving us extra confluence. So I'm going to say that you probably saw my previous time when I was talking about this, probably if I did this on the channel, and you can understand the reason for that, but just looking back the way, I think it speaks for itself largely anyhow. And of course that lines up with that 618 golden pocket in terms of that Fibonacci back there, and that's where we'll be looking to in terms of an upside target. So your upside target there currently is 85. Towards the downside, you're looking down to 61. Of course, and that means 0.00061 and 0.00085, etc. But then thereafter, take that out and we do it in a decent enough way, we could maybe see us moving towards the top side. Would that involve some sort of burning off of any divergences or anything like that along the way? How have we got to where we've got to now? So we turned around in terms of price action, moved towards the top side, got this thrust up the way, then came in with divergence divergence thereafter and went down and actually managed to take out this in-between low towards putting in what was a conceivable sort of lower low before actually history revealed itself as being actually just a bit of an in-between zone, and this wasn't really a high indeed or whatever else, and it was a subsequent one and yada yada, and that's where we find ourselves right now. We've taken out this previous low. We didn't have divergence this time around in terms of the highs, but we have moved down the way and we've come into towards fake out territory. Movements down below 60 are going to be fairly negative for the price. Movements up above 85 extremely positive for the price in terms of the potential movements. We've managed to come to where we are just now without the overall reek of disgusting divergence, but there has to be said that there was some after this point here. That of course being our first initial impulse post sort of, you know, consolidation forever move. And at this point here, did we have bullish divergence? We did indeed. So that was a bit of the sort of the spring being released. Let's see if we can make it back into that channel overall, and kind of then again, once again, you know, really just kind of qualify everything that I was saying there by saying that overall you could be looking at this sort of a structure, and it really depends on which way you want to balance it out. If I put in just two touches, go back. If I put in just two touches here, then or whatever, you could be looking at a number of different ways. If I take this all the way over here, there's always this gestalt nature to trading. This was indeed on the logarithmic chart a rising wedge here, and we have broken towards the downside. But did we get the full measure move? Well, we didn't. Movements down past this, easily looking towards 52, and perhaps where we see this low here and where the measured move would take us from this wedge in down towards the 36 area. But movements towards the top side become very, very positive, taking out our previous highs. Of course, bearing in mind that our previous high that we did put in here was, of course, you know, higher than this interim one here, and looking up towards all-time highs certainly currently. So that's very, very good. Taking that zone out is, of course, the future bite, the future orange. Let me know if you want me to do any lower term time frame stuff for you, buddy. In terms of how we've got down here, I'll just kind of summarize it by saying this low is not as low as the subsequent low. Looking down here, you can very much see that there's very much bullish divergence. So we are certainly primed to be able to turn around. There's very much low risk management trades towards the top side to be had here, with clear profit taking targets being identified just straight off the bat by the very convenient, helpful VPVR looking towards the top side, 92. Of course, if we're moving up this way, that's obvious there, isn't it? Past that, and of course in between time 72 if you're looking to sort of pay yourself off against any movements against you had if you're of course using a margin on your trading. Cool. Let me know if that was good. I see you saying thanks in there. I'm pretty sure you're probably fairly happy with what we looked at there. I hope it certainly helps you with getting some more context on your trading in the meantime. And I'm going to take a look over at 0x for my buddy Zoner. 0x, man, ZRX. Are you sure it's not a shitcoin? 0x, yeah, I remember the first time I looked at this on the channel a long time ago. I said I thought, you know, unless it does certain things, or if it does certain things, then we're looking at a pump and dump shitcoin. Ultimately, what's ended up happening with this thing is it's managed to throw off that moniker. So well done to it. Back here, it wasn't very, very good at all. Once we move past these points in 2020, you know, May, done very, very well. Overall, from a broad perspective now, let us bear in mind. Cheers for that, by the way, 3000 trend. Glad I could be of assistance. Very good to have the likes of yourself on board here, you know, helping support the channel as well as educating other people, because, you know, I'm inclined to do a decent job, obviously, on it, and then that means that everybody watching along who's potentially trading the same thing gets great value education. Looking at this, you know, you could identify this as being the sort of head and shoulders-esque, right? I don't want to, you know, pin the tail on the donkey at this early stage right now, but I would like to point out the key importance of maintaining ourselves above that 29 cents zone. Let's just call it, you know, the 30 to 28 area in terms of the man to look out for who's got a knife to stab you at behind your back if you don't pay attention to what you've got in your surroundings. So I'd watch out for that in terms of the 30-28 man down here if we were to put in a head and shoulders, of course, in this area here. But at the minute it's obviously quite peaky, definitely not that that you know, it's definitely got that rockety ship look to it and everything else. That's all good. The volatility shows that in general it is decreasing throughout it in terms of the average, you know, big spikes, I suppose, in and around about the head of the Head and Shoulders. But that would be your downside sort of broad term view on things in terms of just simply looking at this. And it doesn't really matter in terms of patterns and everything else. Who really cares? If you just want to stick a horizontal line in here, for instance, and around these zones, you can see the significance just looking back the way in terms of it being an inflection point in the market. And it rather speaks for itself. Likewise does in terms of forgetting about Head and Shoulders and everything else, this sort of so-called shoulder area here. And I think that we could probably even color code these things and put this one here as being, oh, actually we'll leave these two as orange because they are, of course, intermediate zones with regards to this. Now, movements down past this could see a ridiculous move, I suppose, in terms of this as a Head and Shoulders. I'll just take it roughly here and kind of gesticulate, seeing that with the logarithmic chart, because we're on logarithmic right now, it doesn't take long to force that down to becoming minus numbers essentially, right? So we'll not look at that because I just want to demonstrate that. Instead, let's look at how this magically transforms when I take it off log. Not magic, right? Not much, but we can see that we are here. So if we were to go down towards these zones, you're talking very, very low numbers in terms of this thing. And instead, we have to look over towards the left in terms of where you might actually find prices coming in and ask the support then for that red line. If we were to have another one, we can see operating as resistance, support, resistance, support, resistance, support, resistance, support here. So we'll put this in. Now I am going to go down the way, by the way, towards lower time. If anybody can actually tell me when did I finish talking about ICX, if you know, that would be handy for me, so I can put it in the description of the video. I forgot to check a look at the timestamp. If anybody knows roughly when that was, that'd be much appreciated. Sending that message out there. There's our red line. And then, of course, looking towards the top side, really, the last sort of ditch attempt in terms of a zone here for us at all to look to is going to come in at around about where we see this inflection point here with regards to the top side. So breaking this zone here towards the top side is where we say that things are, of course, very good. So we've got a degree of traffic lights on the go there. It'd probably be nice then to see how those things sort of line up with regards to, looking at this low here and that high up there, and seeing that we've got the 382 coming in at around about where that green line is. The 236 point obviously very much extended as a result of that blow off top that we had there. The 618 has obviously been taken out again. We see it with the potential for a turnaround at the 786. So that's cool. Back up towards the 50%, giving you that idea that despite the fact that we actually had this blow off top here, that we've managed to actually do enough to have already come up here and challenge the 236 with movements past this point. Now if I actually draw this down to where the bodies are, you can see that we're finding the 236 now operating in terms of support for us with where this is coming in at right now. As you can see here, especially, actually if I just really make this line up, then you can see then that that what was previously, resistance up above we weren't touching is something that's being challenged right now. But going back up towards the wick to wick point of view, maintaining that prices or breaking prices, of it feels a bit wrong almost when you're looking at that and on is this Binance? At least it's Binance, a bit more volume than Huobi. Then you're looking at 236 having been where we found resistance at before. That's fair enough. We've got this channel. We're above the halfway point in it so far. If we move down past this point, then obviously you're looking for support to come in at one of these areas where we've had previously. Looking up the way, you can say some sort of idea about this potentially broadening out, but it isn't really. That's unfair. Jumping down towards the 4 hour time frame, you could have made that point in the past and then said that we've seen something from it, or you could still try and make that point. It doesn't really matter either. We'll ignore that in terms of patterns and shapes. Just looking at this at horizontals, this is the key for us right now with this one. Yeah, we could even talk about it in terms. No, let's not talk about it in terms of percentages. But there's a potential for good times coming up here with regards to this price action, I'm sure, in terms of volatility. Let me bring up the oscillators down below, and here we can see it then. Great, nice one to see. So of course, the red very much positioned above the yellow, like the the negative cross here in the DMI, while we have that extreme volatility with the ADX having operated way down below 10 recently, and all we've managed to see happen during this period of time is this little sort of failed run up again towards the 236 overall. So could we see this turnaround in the negative resolution come into play? Well, if we see the DMI pick up, that would obviously happen as a result of the prices moving down, but we do have volatility here to be aware of, as we've experienced just in the past as well with this movement. It's not seeing it line up perfectly here. Let me just put this back on 12 for a second to see how that would line up. No, it didn't either, but we're seeing it's on the place here at the minute. If we take out that zone, could see big movements up the way, and they're looking at decent percentages between sort of the 236 in there at 0.0 or 0.45 up towards 0.55, and obviously in terms of percentages, these sorts of moves are huge in terms of 20% movement, just taking it from that point there. So I would really just recommend, in the terms of looking at this on the lower term timeframes, to look out for sort of the key points here, and be aware that, of course, we could always take out one of these intermediate lows if we were looking for a re-entry in terms of a long on this one, or indeed come up here and fail at a high if we're looking for an entry on a short, or perhaps that 236, and to choose your sort of profit taking measures, based on your own risk and reward assumptions. But then perhaps to consider, and I'm not a financial advisor, none of this is ever financial advice, to consider looking over at those multiple horizontal lines that we have coming in here at various different price points, to give you an idea about where you could stop in terms of managing your risk. Looking at this from a very, very broad perspective over there on the weekly time frame, we can see that in general it would be fair to make the assertion that as prices have been moving overall towards the top side, having not managed to take out this low over there, take it off log, not having taken out that low over there means we're moving towards the top side, and that feeds back together with everything in terms of the key inflection points we've already drawn out in terms of how that story would change. So we are in the upward trend, and of course our last high was at 70, and that would be more than greedy enough, really looking at this from the point of view of where the 618 comes in at with those body closes, if you are looking at it from a wick to wick perspectivo. Let me know what you think of that in terms of technical analysis, in terms of those that tickle your buttons there as well. K-Doc, I hope that's cool. Nice to see you again, my friend. Tony Quaz. Rocky SpaceX, how are you? I'm very good. Thanks very much for asking. How are you doing, my friend? It's good to have you here as part of the show. You're talking, Zoner, earlier on about your targets, 56 to 72 if Bitcoin doesn't dump, 0x stop loss at 0.36. Current price is 48. I didn't read that before starting. You've got this line in here at 25. You've got this other one in here at 33. Sure, you're thinking that you're stop at 33 or 36. That's cool that you're already got your own profit taking targets in mind. You're looking obviously not on the weekly time frame. Go back to the 4-hour time frame and probably make a lot more sense with that. And essentially you're just looking at this. Yeah, if we take it this point here, after the death zone, was this bullishly divergent? Of course it was, yeah. So you take we've had this movement around. This is our sort of initial sort of foothold in the market. Take that out, then we're going back down and re-challenging those zones again where we put in the previous bottom with the bullish divergence. So yeah, why not think about it that way? Tony, right, nice to see you again, Tony. Corners and Sills, my good pal Tony. Nice chat today, mate. Nice one. Good stuff. Robert Melendez says, what you guys think about Bitcoin? I've been eyeing it for a while. So he's asking, como piensamos? Yes, como piensamos? What do we think? Sobre Bitcoin, he has been eyeing it for a while. What would be the Spanish verb for eyeing? Ojeando, I would imagine. Even though that would be, of course, a bit of a weird one. Let me know, Roberto Melendez, if my changing ojo into a verb worked when I said ojeando. Está bien ojeando. Right, let me know if that works. And let's take a quick look. By the way, when did I finish? I didn't get a time from anybody, did I, in terms of the time for that one? I wanted to edit my description. What did you say there? What did you say as well at the end? What do you guys think about Bitcoin? Oh, cool. You can check that out in the video here. OXT making some moves, question mark, says Tony. Sorry, Tony, man. I'm actually going to tune out now. You just missed out in terms of that. You could have got in earlier on. Don't know, not Spanish. All right, sorry, man. Just making assumptions on your name. Sorry about that. How racist of me, or something. I don't know. I really don't know. I'm sorry. I've got no idea. No idea what I'm talking about. Right. So what time is it there? 1:36 is saying cheerio. 1:36 is saying cheerio. And we took a look at what coin in between was it that was asked again? 0x at some point. Let's just stick an idea in here. Rough guess that we'd looked at it about sort of 23 minutes past. Let's just guess. I don't actually know. So 0x suggestion by Zoner, and he's 3,000. He gets stars. Stars extra for being cool. Stars for being cool and donating. Zoner, and then of course we had the end of the show. End of the show. That's it. Cool. End of the show. So, right, let me just run through some names in here and tell everybody what the chat is as we're zooming out. So the chat is, it's the weekend, and this was, of course, Bitcoin technical analysis for the weekend. And that means that we looked, and as well, crypto technical analysis for Chainlink, Ethereum, and Tezos. Now, what we did in this episode is we took a good in-depth look and explored Bitcoin from a nice neutral perspective with a look towards the top side and the downside, and what key areas we would need to bear in mind for any assessment of the trending action over the coming weekend, when, of course, I take a break. And I'll be back again on Monday to catch up with you all. Then, after 25 minutes in the show, we went on to take a look at Ethereum versus USD. And then after sort of 30 minutes or so, we moved on to take a look at Chainlink. Then after 35 minutes or so, we went on to take a look at Tezos. Now, the links to the times are in the description below. If you're just tuning in now and you're looking for those exact timestamps, then you'll find them there. And we had a couple of suggestions from the audience as well, looking at all of them from a nice broad perspective. We did the other things as well. We discussed during the show, for instance, things like moving averages and what the difference is between the exponential ones and the simple ones in terms of how I actually implement them, not in terms of, technically what makes them different. And we also had a good time here together, everybody being good friends and enjoying the technical analysis. Everybody seems to be fairly happy and satisfied with the technical analysis that they've received so far in this stream. So thank you so much to everybody for your support. I would like to say, if you are watching right now and you haven't hit that like button and you're making it all the way through to me giving you the personal shoutouts at the end of the show, I would love it if you went ahead and did that. And you know what else would be good? If you could come back tomorrow and let me know what your thoughts are in the comment section of this video, and indeed on Sunday. Not putting out content over the weekend means, of course, there's a lot less engagement on the channel, but this is obviously a relevant video for everybody to stay involved over the weekend, and I think smooth enough overall in terms of downtime that it makes it a good watching experience for anybody, especially with those chapter titles and whatnot for skipping around in the video. So if you could come back over the weekend and let me know your updates on the channel, on the various channels that we have in terms of price action, but the different coins we were looking at in today's video, that would be mighty swell. And I will just say then my Cheerios to everybody else. Susan, the answer to your question is because it's currently still live. So, when I actually go off the video, then this chapters become clickable, but they very much will be clickable. And indeed then a shout out to everybody then who else has been chatting here as well. So let's just run through that. Thank you, Susan, for joining me today. Thank you to Tony Quaz. Thank you to Michael John Scott. Thanks to Tony Wright. Thanks to Zoner. Thanks to Roberto Melendez. You guys coming in towards the second half of the show, you can obviously watch back again and see what we said at the start. There's lots of good info out there, really good in-depth stuff for you. Then looking back the way to the people who actually were here from earlier on, we also see Zoner and KDoc and 3000 Trin. If I got your arrival times mixed up at any point, then I'm sorry. But then, of course, looking back up the way, we see that 3000 Trin also donated $5 to the channel because he's a hella good guy and, of course, is willing to pay for his technical analysis. That just shows you the value that we're getting here on the channel. Small channel, and I would love to see us growing, but you can see that people are already, valuing the content we put out here. So it's really, 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 really lovely to have that vote of confidence from you, mate. It means an awful lot, I think, to everybody watching along, that they know that this is obviously the real deal channel and that they're in the right place. And what we do, by the way, is teach you how to become a self-reliant independent trader. So, that's fantastic. So everybody that sees that can, realize that they are on the journey themselves towards becoming that self-reliant independent trader. Looking back up the way, we also had Brandon, the Garden Prophet, joining us, and of course, as well as that, Michael John Scott, and we also had the Saint Resin and Richard, our most recent subscriber there. We also had Spidey Monkey, Damo coming along, and B Paid, who said he just hit the like button at that time, reminding me to ask you all to do that. Then, of course, the people who were here from the very, very start of the show, you've got Nav and Ethan, thanks so much, and you've got Etienne and Damo and all that. Thanks so much. Like and subscribe, guys. Thank you so much as well. By the way, over time, make sure you do continue to chat to me, and I will at some point
point have to look into the concept of having a couple of people take control of the spanners, you know, to become moderators within the chat box and everything else. So let me know in the comments, the videos, and of course on the Discord and everything else if you're interested in taking on some responsibility like that. I don't know who I would give it to. I would have to be, of course, very much careful with that. A very important responsibility to anybody who would like to do that. But anyway, let me know if you're interested in taking part on that level. Thanks so much to everybody who tuned in, and again as well, thanks to for the latest donation, which came from 3,000 Trin. Now, I'm quite disappointed to see here it didn't update on the stream. Just down there at the bottom, it says who let the bulls out still. So obviously that thing doesn't quite work. Don't know how that is the case. That's obviously very, very frustrating. Maybe that's just the latest donation, and the other thing is super chat, and I need to figure that out. Maybe I'll just get rid of that point. I don't know, but I do super appreciate it, even though it doesn't show up on screen, because what it does is, of course, underline the fact that this is a very good place to be, and people need that confidence. And the confidence I give you is towards believing in yourself. So I hope that you do that. Believe in yourself. Carry that forward throughout the weekend. Do your technical analysis on the charts like we've been doing in the episodes throughout the week. Come back on Monday and get that flow going so that you are always greasing the wheels towards success. I'll see you in the next episode. By the way, just going to leave it run for 5 minutes so anybody who's a late joiner can see what was happening and write out a wee quick itinerary, and then I'll hit the end stream button. Thanks a lot. See you again next time.